Hello traders, welcome back to the next video in this series here, in this intro course to trading Forex and price action. This is a very important lesson. It's on building your trading skills, and I think this is such a critical lesson. After working with over 10,000 plus students, I've seen a lot of students repeat the same errors, either before they come to the course or as soon as they get into the course, or just even in their trading process. The first mistake that traders seem to make is that they treat trading as a game of information and not a game or profession of skills. And to kind of think about this in a different perspective, if I was to run an experiment where I take 200 traders, I'm going to split them in two groups, and I'm going to put 100 on one side and 100 on the other. And the first group of 100 traders, I'm actually not going to have them look at any sort of charts. I'm not going to have them watch any videos. I'm not going to have them actually do any trades on a trading platform for the first 6 months. I'm just going to have them read books, one book every single week on trading. So that's the first group, and that's going to be their learning process. Then I have the second group where I'm not going to have them read any books. But what I'm going to do is I'm going to teach them some very basic concepts, and then I'm going to have them practice those skills over and over and over and over again. So I'm going to take trading, and instead of giving them a lot of information, I'm going to teach them skills, trading skills, skills of risk management, skills of reading the chart, skills of understanding the price action. Now, after 6 months, which of those two traders would you want to invest money in? So now you see my point. The answer is obvious. You're going to want to invest your money in the group that is working on their skills, because trading is not a game of information. The person who has the most information isn't the one who wins. The smartest person isn't the one who wins. There's a whole book, and anybody knows their financial history and trading history. It's called Smartest Guys in the Room. It's about LTTM or LTCM, long-term capital management. It was supposedly the smartest people on the planet. And they did great for the first few years, and then they blew up. I mean, it was an incredible blow up, to the point where the Federal Reserve and the government had to step in just to save them in the global economy, because they really messed up that much. Trading is not a game of intelligence. You need a certain amount of it, but it's a game of skills. And so this is a very critical lesson for you to digest and understand, is that you can't look at trading as a game where if you have all this information and you've read all these different books, you're going to be good. No, that's actually not going to work. You need to have skills. There's a lot of skills you have to have in place. Just like if I want to be a quarterback in football, I'm going to need several skills to actually be good at being a quarterback. I'm going to first need to know how to read defenses. I'm going to need good footwork. I'm going to need good grip on the ball. I'm going to need good throwing mechanics. I'm going to need good arm strength. There's a lot of individual skills that will make up a really good quarterback, and the same goes for trading. You need a lot of individual skills that need to be kind of cohesive. They need to work together, and they need to be part of the same system, so to say, of learning. And if you do that, then you can make money trading. That's how this is done. So that's the first confusion, is that don't treat trading as a game of information. Teach it or treat it as a profession of skill. The second thing in terms of trading skills is making sure that you do not go out of order in terms of building skills. I see a lot of traders going for intermediate advanced skills when they don't even have the foundational skills to work on those intermediate and advanced skills. They're jumping ahead. So this is a very common area, and if you jump ahead in your learning process out of impatience or out of wanting to get out of your job and make money or whatever reason, if you skip any steps, you actually make the process longer. So you kind of create this self-defeating mechanism within your own learning process. Hence, this video on building your trading skills is a super important one for you to understand and digest. The model that we work with, the approach that we work with in terms of building your trading skills. So let's jump in. So I have a very particular model and framework for how I teach my students to build skills. And the model actually comes from my Buddhist training. I've been training as a Tibetan Buddhist for 19 years. And in that training, we have this particular model, which is called base, path, and fruit. So let me explain how this model works. And once you kind of understand the individual components, so that it will just make sense in terms of a particular training model. So the base that you always start with, think of it like the base of a pyramid or base of a house, foundation of a house. It's your starting point. It's your foundation. And this base has to be a fundamental level of direct experience you have. So, for example, if I want to learn how to snowboard, but I've never actually been on a snowboard, it doesn't matter how many books I have on how much knowledge or videos I've seen about snowboarding, I'm going to need a muscle memory built. I'm going to need to do that through getting on the mountain. I'm going to have to practice over and over again what it is to really ride an edge versus skidding. How do I manage, an increase in steepness in the mountain? How do I manage dual fall lines? How do I manage all these things? I could read all the books I want, all the videos about it, but that's not a fundamental level of direct experience. That's just conceptual knowledge. A fundamental level of direct experience is not something that can be negated by a book or anything like that. If I've been on the mountain 50 times snowboarding and I can demonstrate and show you, and I have a direct experience of making S-turns and carving and riding my edge versus actually skidding, which is something different. If I have that experience and I've been able to duplicate it, then I have a fundamental level of direct experience that cannot be negated. So this is your base. If you don't have this base in place, then you can't progress to the next level. So it's important to understand where is your base. We've been building your base in this course so that you have what I would call a beginner, or not intermediate, but it'd be more of like beginner to advanced beginner in terms of knowledge, in terms of things you've been exposed to, in terms of things you should have practiced by now. You'll have a certain base in place. So in any training model, this base, path, and fruit model applies. You have to start at the base. If you don't have that base point, then you can't move forward. So then your goal should be to get to the base. Just like you need to get to the base camp before you actually climb to the peak of Mount Everest, this is the same. So this is what the base is. The path is the actual practice that works with you from whatever your base is. And the goal of the practice, or method, another word to describe this would be method, is to have a very specific practice that if you do this, it's going to wire in a very specific set of behaviors and mindset into your brain. It's going to build particular skills. It's going to build certain muscle memory depending upon what it is. So if I need to, again, let's go back to snowboarding. If I need to understand that how I'm initiating my first turn is with my front knee, I'm going to need to go practice that on the mountain on various levels of steepness, on single and dual fall lines. I need to practice that mechanic. If I do that consistently over and over again, eventually it'll become subconscious and it'll become a habit. And that will have a very particular result. So the path is the method to take you from your base and to create a very specific result, to make a stronger you, a smarter you, whatever it is. This practice needs to be a very specific practice, and it has to have a very specific intention and focus in terms of what it produces. So that's the second part of this model. The third part of that is the fruit. So if I have the goal of increasing or decreasing my, my fat and increasing kind of the muscle that I have on my body, well, then I'm going to need to go to the gym, and I'm going to need to do cardio, and I'm going to need to make some changes in my diet. Those are the practices that I do. And if I do that long enough, then eventually I'm going to be in really good shape. And I'm going to have that, kind of physique or physical ability that comes with all that work of going to the gym again and again and again. So the fruit is the result of the work. And it should be relatively specific. So it's the kind of thing where you should know, you're in a good training system if the practices and the methods that you use create very predictable results, very predictable fruits. Otherwise, you're just kind of shooting in the dark, aren't you? If you don't know what the result's going to be, you don't have a rough idea, or you have no other baseline or experience or data to show that, hey, when somebody does this practice again and again and again, eventually it leads to this. If you don't have that, then you're in the wrong system. You're going to get very inconsistent results, unpredictable fruits or results. And so we have very specific practices that lead to very specific results. So the fruit is what you get when you do all that work. And this is super important. And when you understand this model and how we approach trading, you realize there's no way to skip steps here. You can't just go from the base to the fruit. It would be nice if we could, like maybe the movie Limitless, we take some pill and all of a sudden we're just like super smart. No, it doesn't work like that. That doesn't exist. Don't bet on that existing anytime soon. So you can't skip steps here. You can't just jump into the path and without having the base in place. So there's no way to skip steps here when you realize kind of how air and watertight this kind of model is in this framework of training. So now that we've talked about that trading is a skill-based endeavor, let's talk about the actual skills you're going to need to build. So this educational course is on building your skills to trade the Forex market, really any market, and we're using price action as a methodology to do that. Now, there are many skills you're going to need to build to become a really good and profitable and skillful price action trader. The base or the basics that you're going to have in place is you have to have a basic understanding of what charts are, candlestick charts. You have to understand how the time frames differ and how that has an effect. You have to have a basic understanding of technical analysis. You notice we've provided all that. We've kind of talked about all that leading up to this. So we built that base in place, but those are the basics in terms of price action. You can't just jump into trading skills without understanding what a chart actually looks like and what that information is communicating. The next step is the core skills of price action context, or what I call the 3 pillars of price action context. And so these are 3 individual kind of pillars or approaches to understanding price action context that individually are insufficient, but collectively they're totally sufficient. In fact, they're more than sufficient enough that if you can master these skills, you can understand price action on any instrument, any asset class, any time frame, any environment. That's how powerful these things are. But they're going to take time to learn. You need time to practice that. So the intermediate skills, once you have the basics in place, are the core skills of price action context, the 3 pillars. Now, the first of those is the first pillar, which is impulsive and corrective price action. We've talked about this. Why is this the first pillar? So there's a couple of reasons why impulsive and corrective price action is the first pillar. The first thing is that when you start to understand what impulsive and corrective moves are communicating, they teach you to, by default, by looking at the structures and looking at these types of moves, they by default teach you to start thinking like a price action trader who's getting an understanding of what the order flow is behind the market. This is why we don't focus on 1 and 2 bar patterns, because 1 and 2 bars by themselves isn't going to communicate anything. And even the people who trade 1 and 2 bar patterns like pin bars and inside bars and all this, even they admit those 2 bars or 1 bar or 3 bars by themselves are meaningless. The context is what makes them more powerful. Well, if you're implicitly admitting that the context is what makes 1, 2, or 3 bar patterns more powerful, then shouldn't your first and primary skill or focus be on learning how to understand the price action context? Seems obvious. In fact, once you start to realize that, you actually ditch the patterns because you realize that studying the structures, studying the gestalt, studying these 3 pillars is the foundation for all the other skills you need in price action. It helps you understand price action on a deeper and deeper layer. There is no limit to the depth that you can understand price action by working on these skills. So that's why it's just such a ludicrous idea that your strategies are going to be 1, 2, and 3 bars and you should focus on these patterns. Oh, but they're not useful unless they're in the right context. And even then, the context is more powerful than those, 1, 2, 3 bar patterns. You see kind of how ludicrous this idea is and how ridiculous it is. Your goal as a price action trader is not to focus on candlestick patterns. You're not a candlestick pattern trader. You're a price action trader. That means you understand the price action and you're able to get an understanding of what the order flow is behind that, so you understand what's happening in the institutional market with the larger players, the ones who are actually driving the market. It's like kind of getting an insight. It's like being a surfer and having some sort of tools or machinery that's going to tell you what kind of waves are coming your way and how fast they're going to come, or slow, or how big or small. Tell me that wouldn't be an advantageous tool as a surfer to have that. Like, you're out there in the water on your board and there's like this little screen on your surfboard and it's basically telling you, hey, these waves are coming at this time, or you should watch it. They're on their way. They're going to be big. They're going to be small. Whatever. That would be a very powerful tool. That's what it is to trade price action, is to be able to understand what's happening in the market, in the large players who are controlling it, who are creating the order flow and creating that price action. Because we're directional traders, we're trying to profit on the market going up or down. So we need to know who's in control and who's not, which direction is more likely, which is the line of least resistance. We need to know these things. And so impulsive and corrective price action gets you to start thinking like a price action trader. It like teaches you the mindset, it teaches you the approach, it teaches you what you want to be looking at on a daily basis so that you can trade any instrument, any time frame, or any environment. The other thing about impulsive and corrective moves is, in terms of the first skill, is because it teaches you, by and large, it teaches you the most amount of kind of concrete information as to what's going on in the order flow. So when I have a really impulsive move like I do here, if you were to count this, I'm willing to bet, what, 2 out of every 3 candles is a bull candle? So think about that. If this is a 4-hour chart or a daily chart, think about that. 2 out of every 3 candles that is forming. If it's a 4-hour chart, you're talking 8 out of every 12 hours is bullish. 8 hours is generally one session. So out of a session and a half, one whole session is bullish. Or if it's days, think about it. 2 out of every 3 days is bullish. The largest candles are bullish. Most of the wicks are to the downside, which means that the market is trying to go down and it's rejecting those prices and shooting it back up. That's a lot of information there. There's a lot of concrete information I can understand about the order flow by being able to read an impulsive move. And the same goes for a corrective move. Hey, there's no directional control right now. It's a lot of small candles. There's large candles on both sides of the market. It's a mix, 50-50 candles. That's a lot of information. So these two fundamental reasons kind of communicate the importance of why price action context is important as skill, and why impulsive and corrective price action, or impulsive and corrective moves, is the first pillar. So this whole approach that we take is based on understanding the brain. It's based on the neuroscience of how your brain works, which is that when you are in front of the charts, you don't want to be having a lot of mental activity and thinking activity going through your brain. That's, hey, is this impulsive move? Is it a corrective move? I don't know. What's the series look like? Well, I don't know. Does this tell me the order flow is this, this, and this? If that's what's happening going through your mind, how do you have enough bandwidth or clarity or insight to make a trading decision? You don't. When you're trading, you don't want a lot of that busy thinking going on in terms of if it's an impulsive move or not, if it's a corrective move or not. You don't want that. Because if that's happening, then it's taking away bandwidth and it's taking away neural real estate in your prefrontal cortex to make really good analytical decisions. So your goal should be to build these skills of price action context until they're subconscious, until they're habit, until they're automatic. So I don't need to think about, when I pick up the guitar or jump on the piano, hey, is this the A? Is this the C note? What key is this and what's the pattern? Like, I'm not thinking about that. I already know what that is. My hands know where to go because they've learned these keys inside and out. So when I'm reading the sheet music or reading the notes that I'm supposed to be playing, it's super easy. I don't have to think about it. This is how trading has to be. You have to build your skills to their subconscious. This way it frees up the bandwidth, and it kind of releases the energy going through your prefrontal cortex to be available for making good analytical decisions, to understanding the risk, to analyzing, the risk versus reward. There's so many things that your brain needs to have bandwidth available to do, and if you don't have the skills in place, then you're going to waste a lot of cognitive and mental activity and bandwidth just to actually decide if this is an impulsive or corrective move. So your goal should be to build your skills until they're subconscious, until they're habit, until they're automatic. And the best way to do this is through a trading simulator. Our model for learning trading is very straightforward. You start on a simulator, then you work on demo platform, and then you work on live. And so the best place to start is a trading simulator. Just like for an airline pilot, the best thing for them to start with is not jumping into a plane, but actually getting into a simulator to make sure that they have all the skills to be able to read all the instruments and adjust them correctly. It's the same thing for you. The best way for a golfer to become a professional golfer is not just jumping into a tournament right off the bat after they've learned how to swing a club. It's getting on the driving range. It's then getting on the putting green. It's then getting on the chipping green. They're working in a simulated environment to build these individual skills. Once you've done that, then it's time to kind of move into a demo account. Now we're kind of synthesizing these skills together and trying them on a charting platform in a live market with a demo account, which reduces the psychological stress of dealing with losing and winning your own money, takes that away and just says, look, we're going to show you the exact prices that professional traders are seeing right now. The only difference is you're not playing with real money yet. So go practice your skills and show us that you have consistent behaviors. Show us that your execution, your mental execution is consistent. Do that, and then it's time to move to live. That's our model for building your skills. The last thing I want to talk about is kind of the mindset, because you are going to need to build some mindset skills to make money trading. There's no way around this. Just like a professional football player has to have certain mindset skills, or a mixed martial artist has to have certain mindset skills, you're going to need that when it comes to making money trading. And to kind of make this process easier for you, I'm going to tell you what your first goal is in trading. Your first goal in trading is consistency. It's consistency in your thought process. It's consistency in your mindset. It's consistency in your risk management. It's consistency in your mental execution. It's consistency in how you prepare. It's consistency in how you review your trades. It's consistency in how you find setups every single day and do your analysis. Consistency is the first goal you should be shooting for, because without consistency built in as a habit, as a mindset, there is no further progression. There is no path to profitability. It's like if you don't have consistency, there's no solid foundation underneath you, and you can't build a house like that. It's the same with trading. So the first stage for you as a trader is the stage of discipline. And the reason why this first stage is a stage of discipline is because you right now, as you're watching this video and listening to, my voice here, you do not have all the skills to make money trading right now. If you did, you could just jump on a chart right now and start making money. Like, you could start trading now and you'd do that, but you don't have that. And so you're going to have to rewire certain habits, certain neurological networks in your brain. You're going to have to create certain neurological and biological wiring and kind of a mindset to do this. And that is going to take discipline. It's going to take a commitment and a focus to a particular goal, an end goal, understanding that you have to take these small steps along the way to get to that end goal. Just like I need to take many steps before I can even go to the base camp of Mount Everest, and then I'm going to take many more steps to get to the top of that mountain. It's the same thing, and you're going to need some discipline, some kind of resilience and fortitude to be able to go against your biological wiring, to go against your tendencies, your fears, your worries. You're going to need discipline to counteract that, and you'll need that to help wire the correct habits in. So the first stage is really the stage of discipline, and the reward or the fruit of this stage is consistency. With discipline, doing things over and over again, eventually you make it habit. That habit creates a consistency in performance and execution. And so if your goal in the beginning is consistency, then you're going to need discipline to do this. You're going to need to build this discipline to create that kind of mindset, that habits, that ability to execute, so you eventually are consistent in your execution. Without consistency, you cannot progress to the second stage. Just like you cannot build a house on a shaky foundation where the walls are moving every single day. That just doesn't work. That's what it's like with if you don't have consistency. Consistency doesn't come from the system by itself. Consistency only comes from the mind. If you have no consistency in your mental process, in your thinking process, in your self-talk, in your mindset, in the things you've wired into your brain, then there will be no consistency in your trading. There is no way around this. For any trader, consistency has to come from the mind. We're not athletes who are throwing a football or kicking a soccer ball or shooting a basketball every day, where the consistency does partially come from our mindset, but it also comes from our bodies. We have to wire the muscle memory in to do that. No, that's not what's happening with trading. Trading is a game of the mind and the mindset and the mental skills that you have. And you're going to need consistency to do that. If you don't have consistency in your mind in terms of how you approach trading, you won't have consistency in your trading. So just remember that consistency only comes from the mind. So I've talked about kind of the mindset in the first stage that you're going to be working with. Now I want to talk about some very specific mindset skills. One of the most important skills to understand trading and making money trading is actually understanding how the brain works. And one of the most fundamental principles about how the brain works is called neuroplasticity. The best way to understand neuroplasticity is the brain's ability to rewire and reorganize itself and structure and in wiring, and so that you can learn new habits. It's how we learn. It's how we evolve. The phrase or the best statement to understand this is neurons that fire together, wire together. In case you don't remember or don't know, neurons are neurological circuits. They're like the fundamental brain cells you have that try and communicate with other brain cells. And that communication, how well they're wired to do that, is what builds habits. And so neuroplasticity is the ability of brain cells to connect to other brain cells so that it can create new habits. You have to understand how neuroplasticity works, because understanding how this works is understanding a fundamental way how your brain works, and you have to work with that, not against that, in your trading process. Another key mindset skill is called the GBT mindset, or the Getting Better Today mindset. So this is someone who isn't necessarily focused on, if you have this mindset, you're not focused on making money today per se through trading. The most important thing you're focused on is building the skills to make money trading. You know, right now I'm learning to play poker. And so, yeah, I like to make money every single session I sit down, but I know that's not realistic. Even if I knew how to play poker, it's not realistic. And even then, I'm focusing on a very beginning set of skills so that I can make them automatic. Once I have that, then I'm going to work on intermediate skills. But whether I make money today or not on the poker tables is irrelevant to me. What's most important to me is that I got better as a poker player today. My skills got better. My skills got more automatic. My ability to read situations and poker hands and pre-flop has gotten better. Understand ranges has gotten better. So I'm not focused on winning and losing today. I'm focused on getting better today, because I know if I get better and do that every single day, the winning will come naturally. So getting better today mindset. What can I do today to get better? That's a super important mindset. Self-awareness. This is a super important mindset skill, and it's an underrated skill, because if you don't have any sort of level of self-awareness or self-reflexive awareness, then when emotions come up or your mind kind of starts to go off the reservation, you don't have the awareness to realize that's what's happening. And basically then you go on autopilot, and now you're making really bad decisions on autopilot, and it's not you. It's not your conscious awareness that's doing it. The way around that is self-awareness. You have to build a level of self-awareness in terms of what triggers you, what doesn't, which parts do you relax with in trading, which parts really kind of frustrate you. This is all part of the process to build self-awareness, and you're going to need to do this to make money trading. There's no way around it. So with that being said, I really hope you take this lesson to heart. This is one of the longer lessons, and there's so much meaty information in here. I've condensed things into this video that have taken me years and years to learn, and 5, 6 plus figures to learn. So I'm saying these things to save you money, to save you time, in the hopes that you really take this on. Out of the 10,000 plus students I've worked with, the students that take this on and really do this, those are the ones who progress the fastest and start making money the fastest. The ones who skip this are the people who take years and years and years. Sometimes it takes them even a couple years just to unlearn the bad habits, or going kind of against this model and structure and framework of trading I've created here for you. So really take this to heart. I hope you do. I really hope that you make this a part of your practice, because if you do that, you're going to see the results. You're going to see real changes in your trading performance, in your mindset, in how you perform. This is a real thing. So with that being said, I hope you enjoyed this video, and I'll see you in the next lesson.